And that creates the big candle to the upside. So right now, what we're seeing here, as this is pre-buffering, we're starting to see GameStop starting to break out here. Now I'm still watching it. I'm keeping my eye on it because it could turn around at any second. We're trying to see if it's gonna tap here. Remember, look at the cross look at the cross and where I'm pointing at. Okay, we're trying to see if it retests this level that we just broke out from, which is right here. Look at the horizontal line on the cross. All right, let's see if it breaks that horizontal line, which would be, it was formerly resistance and now it's support. Already we're meeting a new level of resistance here. It's even tighter range. It's like kind of like you're getting into tighter and tighter ranges every single time. So what is that telling you? We might pull back here. And if it's not going to break and keep going higher and volume is not increasing fast enough, we're going to head lower. So let's see if this volume candle down here starts to match this volume candle here. If we don't get the same volume candle and it's not higher, we're going to pull back. We're going to lose money. And we don't want that. So I'm making sure. Remember, sometimes retests, they'll happen here, pull back, and confirm right here, and then it'll start to head higher. So it's looking good right now. It's looking good. It's looking good. Oh, it's happening here. Okay, now we're starting to pull back. See how we're starting to pull back? Starting to pull back here. Right. See what happens here. Okay, so far we have intermittent, we call it intermittent resistance level here. Okay, that's what I call it. It's intermittent resistance level. So we hit that. Now we got to gain an intermittent support level here. So we're looking at the level 2 here. See if we're getting that support. So 342 would be the intermittent support here. Oh, what happened? Okay, I'm having connection problems here with the buffering. Huh. It's pre-buffering. All right. So we have that intermittent support here, and we're still holding it. Doesn't seem to be going any higher. Remember I told you, I'm willing to give up a couple dollars here just in case this fails and we head lower. I need to have a confirmed breakout. Because if it's a confirmed breakout, that's telling me, hey, we're going to head higher. I want to get in at that point. As a day trader on this. So we're watching. Something's up with the chart here because it's not updating. Maybe if I turn it to the 5 minute, will that work? Yeah, okay. There you go. All right, let's go back to the 1 minute. It's funny because you can see here it was a high here, but it's not showing. The computer's not letting you do it. But we're pulling back, so we're going to retest here. Always watch that intermittent support level. Oh, it broke through that intermittent support. So guess what? We're going to retest this new level here. I'm going to have to activate this drawing here so you guys can see what I'm talking about. So I'm going to activate this. I'm going to move. Zero it out. You see what I'm talking about right there. So it's retesting that new support level. It broke out that resistance, became a new support level, and now it's retesting that support level. Let's see what happens here. If it breaks lower, then that's it. That's the end. It's going to start heading back down, and you'll know that you're hitting a resistance because you're starting to see the intermittent ranges get tighter and tight. Like it'll break a major support level, hit it, and then in the next level, it just gets tighter. You'll start seeing the consolidation range just gets really tight. Kind of like you're digging in sand, but upside down. Digging, 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 digging. It's getting harder and harder and harder. And it's more and more resistance. And then eventually it'll start to pull back. And it'll pull back hard. So let's keep watching it. Let's just go 15 minutes forward and see what happens. Bam. Just like that. Cracked right through the resistance. That's why you confirm. You make sure it confirms. And it goes over. Because of situations like this. This happens. And you lose money. Because you buy here. You're waiting. You're waiting. It just broke the level. You saw a retest. But just because it retests and confirms doesn't mean anything. You have to see volume come in while it's retesting the breakout. If there's no volume, extra volume coming in, it's not going to head higher. You need to see follow-up volume after the retest. Give it time to retest. Just because it breaks out, it's not going to go straight up. Rarely does it do that. You'll have a breakout, and then it'll have a retest back to the support. Sometimes it's quick. And then you'll start seeing the volume pick up, and then it'll start heading higher. You'll know because it'll just keep going. It's not slow. If you're having problems after it breaks out right here and it takes a while, chances are it's going to reverse on you. You don't want that. So we're looking here. It pulled back. It's probably going to retest these new lows. It hit. Once it broke this level, you notice how we went straight down quickly. The reason being is because it hit a bunch of stop losses on the buyer side. There was buyers here, and it had automatic stop losses set here, and it just kept hitting every stop loss. That's the mentality of it. And I'm going to be speaking about the mentality and psychology in other videos. I just want to get just some more analyzing the dip buy video here. But we're looking here, and we got to go at a 5 minute because sometimes this chart does not update. Okay. Look at that. Now it tests this minor. It broke that. It broke this support level here, right? There's a major support level. Then it hit an intermittent support level here. Now let's see if it respects that intermittent support level. This would be a short setup at this point. It broke the intermittent support level. That's crazy. And now you have instead of a red to green setup, you have a green to red setup. Now you're red on the day. Now, in a situation like this was the day on GameStop when we had that huge dip. I mean, it was huge. It was that manipulation, I would say, type of dip where it just went straight down. All right? And in these plays, if you're an option trader, you'd want to get a put. If you start seeing it break these levels, you'd either get a put right here. Protective puts are good because it protects you from crazy moves like this. Not, just small pullbacks, but large pullbacks like this. This is what you want to avoid, okay? That's why puts were designed. Puts were not designed to just bet against the stock. If you wanted to bet against the stock, just get a short sell it. You just short sell the stock itself. This, when you get puts, you're protecting 100 shares, okay? I'm going to do a little example with my puts, but I want to just show you when we're dipping. You can even see the implied volatility is still up, okay? Right now, the clock is moving right here, but we're halted, okay? We're halted, and it's 2 million in volume here, okay? So you can see implied volatility starting to go higher, okay, not lower. So those contracts right now, we were to go to those contracts on the option chain. Oh my God, those contracts are extremely expensive right now. All right. If we were to change this layout here, we were to change it to implied volatility. The implied volatility is starting to jump. You're starting to see it near 275, 300. If we were to go back to the chart here, well, actually, it's 3. Ooh, we opened up. Oh no, we're still holding. But you can see here. Look at that. Went all the way to 393. Now, this is the simulation, so it's kind of hard to pull up the actual implied volatility on here, maybe I have to go to the option statistics. So what I do is I close the option chain here, close that real quick, and there's no option statistics here. On the live version there is, but go back here. Look at the implied volatilities for here. Crazy, crazy, crazy numbers. So the puts are getting really expensive. The calls are getting really expensive. All right. The deltas, you start to see the put deltas. They're less over here, so you're only making $1 every time there's a movement on AMC going down. Well, sorry, on games. Yeah, well, sorry, that's no wonder. I'm sorry. I was looking at the wrong one. Sorry. GameStop. There we go. Look at that. Oh my God. Look at the implied volatilities on that. Whoa, 1,000% on a 41 call. Let's look at So this is at the money. Look how expensive. 400%, 300%. Okay. The contracts are expensive. If I were to go to the chart on this, wait, let me close that because this is too big. Let's say I were to go to. Let's say I were to go to let's go to a volatile one. Let's go to this 600% one right here. Let's go to 60 call here. All right. It's way overinflated right now. If I were to copy this and pull up the chart, let's do that on the flexible grid. Actually, I'll just do it here. There's no way. I'll just do it on the flexible grid. Just close these out. Hold on. Customize grid. Take that out. Take this out. And just take this one out. Alright, X it out. Let's go. Let's put that actual call option in here so you can see the chart. This is the chart of the actual call option, okay? So you can see here, let me get grid away. So you can see here, it's already inflated. It already went to $2.85 per contract because the IV is so high so far. And that's a way out of the money contract, okay? Way out of the money. If we were to go back here, oh, look how much we dipped already. One shot. We're halted again. IV is jumping like crazy. Look at that. Crazy numbers. All right. So we're going to go back to the grid here. Let's close that up. We don't need to see that right now. See here. Let's go to more in the money right here. These are more volatile because they're at the money. What we're going to do, we're going to copy this. These are the puts, by the way. They're becoming more expensive. It's $48. They're becoming more expensive right now. And you can see on the chart, if I were to pull up the chart for that, right here. Well, nope, not the flexible grid. We're going to pull up that particular chart for that pattern. It went from that. This option went from $20 to $49 today. Just like that, from that move. Okay, if we were to pull up the 5-minute chart on this, look at that. While GameStop's going down and dropping, this GameStop option is jumping up like crazy right now. Just because of that implied volatility. If you buy it here, when implied volatility shrinks, we'll go back to this call option, this put option. When implied volatility shrinks and lowers again, this is going to be worthless. I mean, it's going to be it's going to go back to $20. So if you buy here at, how much would this cost? If I were to buy this right now, can I buy this right now? Well, I can't buy it right now. But let's just, this would cost you $4,000, okay? At least $4,400 because we're timesing that by 100. So that's how much it costs you. But anyway, let's go back to the chart on actual GameStop, okay? So we're still halted. What we're going to do is fast forward 15 minutes. Okay? Wow. So look how many major resistance levels we broke. Okay? We're still halted. Well, it's pre-buffering too, but at the same time, there was halts like crazy right here. Now, if I were to go ahead and go back to that chart, we'll see how much that put option is worth now. Let's go back to that put option chart. 50. Woo. Oh my God. It went from 4,400 to 50. It's about $5 grand, just like that, in that one shot, that put option. If you had it. If you had a protective put, you would have made money from that put, increasing in value. So let's go back here. I would have closed it right there because that's too high of an implied volatility spike. Okay? Now, you know, every time there's a dip like this, there will always be a bounce back up. And the reason being, it's like a reflex theory. The more you push the rubber band, the harder it's going to push back. Okay? So this pull down, right, all in one shot is going to create the same reflex effect. It might reflex midway through, or it might go all the way back, hit here, and consolidate and go higher. You don't know. All you know is that the more it pushes and pushes and pushes, the higher the chance that it's going to turn around, especially the quicker it is. If you push on a rubber band, it's going to push all the way back. So right now it's pre-buffering, and I want to go, because this happens quick. When you have volatile moves like this happens quick. Look at the RSI. Way oversold right now. So these are really good times as a buyer or as a call. Well, I wouldn't get a call option here unless it's a high delta. Like if we were to pause this here, remember, we're pausing this in time, so it's 1250. Okay? I'll let this pre-buffer while it's happening. But the call options here, we're going to go for a high delta call option. And I'm going to show you the difference. So we're going to buy, I'm going to show you the difference between buying a 60 call option here, right? Let's say we're going to order this one. No, we're buying it, right? We're going to buy that. That's going to cost me, it's going to cost me $16,000. You can see here, because it's only 162. So times 100 is 162,000. That's about $16,000 per call option. This is just for educational purposes. We don't got crazy money like that. So hit that. And we have a buy order for that. And I'm also going to have a buy order for a delta that's way out of the money. That's cheap. This one only makes $24 compared to that one delta that gives you $100 for the same $1 movement. So I'm going to buy this one. All right. So I'm going to hit the ask on that. That's going to cost me only $4 grand for that one. All right. But remember, they're expensive as hell because the IV is high. So I'm going to hit play, and I should get executed real soon. Or what I can do too, I'll hit the monitor trade here. What I can do is change the order here, customize the order to a market order, so I get executed. Normally you don't do a market order, you're doing a limit order, but I'm gonna do a market order so I get filled. Okay. I'm also gonna do it for the other one too, but normally you don't do that. You just hit a limit order. So we'll go with that one and change that one to market order. Okay. Yep. Bam. All right. So right now we're still halted most likely because I don't hear any tinging sounds. So see, there's nothing on timing sales. Level 2 is not doing anything. But this is a key. Whenever you see oversold and it pushed down this quickly, you know there's always going to be a mean reversion, meaning it's going to go back to the mean, which would be the middle, most likely right here. Now, if we bounce back up, we're going to most likely hit 260 really fast when we get that bounce back. So you're getting the call option. You want to make a quick profit on it, and you got it at this bottom right here, and you start seeing green candles, you know